Man, what is happening to this stock, guys? Duolingo. Holy cow. Had its earnings today, and I think that it is down another, 15% after hours? 12% after hours? Holy cow. Over the past, 3 months, it's actually kind of flat, so alright. But over the past year, 77%. Holy cow, guys. Gosh, is this a bottom or what? I don't know. So we're gonna look at it. I've heard a lot about this stock. Um, it's a like language learning software program thing. And it had its earnings today, and we're gonna look at it. We're gonna do what we always do. We're gonna look at the latest earnings, the current valuation, and then kind of a few other things to consider and to look at. So here is the earnings that came out today. And you can see that the revenue growth is still happening year over year, along with the gross profit, also growing, by quite a bit. Yeah. So doing good there. The research and development up a little bit, sales and marketing up a little bit, and G&A basically flat, which puts the operating expenses at a growth, and then you can see income from operations is still up, almost double year over year. And then you got some negligible other income stuff, and we'll finally get to the net income, which did still grow year over year. So that's great. That looks good to me. Let's see. Let's check the cash flow here. Operating activities, great. I want to see financing activities. Right here, it looks like they're doing buybacks since they spent money in financing. And then a lot of cash flow from their operating activities. So that looks pretty good. I want to see what revenue projection did Duo stock put out for 2026. Oh man, I'm testing ChatGPT now. Okay, so revenue projection about 1.2 billion. 1.2 billion. So that's good to see. So great. What is the net income projection for 2026? I think that matters a lot for this stock. I know we can look at past guidance, but for this one in particular, I'm going to look at the guidance here. Oh no, ChatGPT, did I break you? I have, oh, didn't give it. So just EBITDA, 25%, so 300 million about. Net income, margins are expected to decline to AI investment and growth spending. So let's say it's 200 million. That's the net income that they're giving for the year. So, all right. So now we're going to look at the valuation, and I'm going to start off with this right here. 5.16 billion market cap. And you'll ask yourself, do you need a little over $5 billion to create 250 or 200 million in, net income? And ask yourself that. Shares outstanding is below 50 million, which is interesting. The lower the share count, the better in general, better for your earnings per share. The trailing 12 months P ratio is 13, and the earnings per share for the trailing 12 months is 8. I'm going to guess the forward. Well, I want to see the forward. It usually has it listed here. What is the forward P ratio for dual stock? Okay. So this is saying between 20 and 30, which is doing the half to 25. So surprisingly here, if you're doing off the Ford P ratio, this is maybe contested on if this is undervalued or not. Um, and again, that's going off of, you got a market cap of a little over 5 billion, and you got to ask yourself, do you need, do you need $5 billion to create 200 million in net income? So that's an interesting to look at for that valuation. Um, Look at this. Yeah, or MSN Stocks likes it. I want to see real quick. What's this trend? Pretty solid. Look at this revenue. That's a 10x revenue growth in 5 years. Cost of goods sold grew proportionately, and then your gross profit also went up quite a bit. Let's just go straight to your net profit right here. And you can see a lot of growth from 2024 to 2025. Quite a bit there. I wonder, I want to say there's a one-time deal going on here though. I want to check that. There's a lot of growth here from 2023 to 2024 too. Because if you're saying you got a net profit of 415 million in 2025, and then for 2026 it's only going to be 200 million maybe. Why was the net income for Duo stock 400 million in 2025? And is that repeatable? Oh, yeah. Not reflective of normal profitability, was heavily boosted by a one-time accounting event. So you got to watch out for that stuff. This valuation allowance on deferred tax assets created a one-time income tax benefit of 256 million. So you got to watch out for that stuff. Because that, over half of their net income was from a one-time thing. So that's tricky. Let's check here real quick. How much debt do they have? Did I pass it? Yeah, I did pass it. Um, this is in thousands. So this is a billion. No, they got about 100 million in cash, 250 million in cash. Excuse me, and then in debt, they got a lot of long-term operating under the leases. Sorry, and then they don't have any debt besides that. Um, yeah, they just have this very large. I'm pretty sure that's what this is. They have this very large deferred revenues right here, which is not a concern. It's that long-term debt, and they don't have any, so that's looking good. It's a pretty healthy balance sheet. But you got to remember right here, this is tough. This net profit, a lot of that is from the that one-time accounting benefit, so that's tough. All right, so that's kind of the valuation that you're looking at. And then for other things to consider, you got to ask yourself, is their business product still viable? Is ChatGPT and AI gonna replace language learning? You can converse with your phone in a different language if you want to through ChatGPT. Does that replace Duolingo? Are they adapting quickly or fast enough? Those sorts of things. We know they're doing buybacks, but I want to ask, do the buybacks Duolingo is doing offset stock-based compensation? We know they're doing buybacks because the financing cash flow is negative. So, okay. So the stock compensation has actually gone up quite a bit. So you're looking at 13% of revenue. So that's a lot of dilution. Yeah, like they're saying. 400 million share repurchase program in 2025. Sounds large. But the tricky thing is that it looks like it's mixed here. Because the buybacks don't happen all the time and the stock-based compensation is happening. That's a tricky thing that I've been trying to watch out for with stocks, is that a lot of companies will announce buybacks and like, oh, that's great, but then you gotta always ask, well, does it offset the stock-based compensation? And a lot of times it doesn't. And look at this, the share count is actually going up. So that's interesting. Are insiders buying dual stock? Well, that guy bought a lot, 500,000. But holy cow, guys. 250 million in insider selling. You gotta remember, that doesn't mean that it's bearish, it just means that a lot of these people are getting stock-based compensation, you know? So that's how they get paid, is by selling their stock. A lot of them. So, let's see. I think those are the main things I want to cover. This one's tricky because there's a few little hidden things in here that you got to watch out for when you look at it. The main things that I'm thinking is that, last year a lot of their net income came from an accounting adjustment, and then you got to look at the forward guidance and the forward PE ratio, and then the kind of the business model. Is it viable with AI and the language learning, and how does that affect it? The stock buybacks, but then also paired with the stock-based compensation. So, this is kind of my first time really deep diving into this stock. So if you're a regular, I've heard a lot of people that really like this stock, a lot of people that really hate it. So if there's something I'm missing, I would love to hear what you think, and I will see you guys in the next